If you're running a business and would like to start a new project, for example, having a factory to produce laptops, what would you need to start this project? First of all, we need cash. And what are you going to do with this cash? Well, we're going to buy raw materials, land, buildings, machines, equipment, and technology. All of these are called assets, which we can simply define as what the firm owns. Let's say the sum of all items under assets will cost us $100 million for the project. So we need to raise $100 million to finance the project. But how are we going to finance this project? Firstly, from our savings. Let's say we have $30 million of savings, which we will call equity. So equity in this case is simply our net worth. As assets cost $100 million, we still need $70 million to finance the project. In this example, we will get this from a bank loan, which is called liabilities or debt. Liabilities simply mean what the firm owes, or what the firm needs to pay in the future. Please note, liabilities is the British terminology, while debt is the American terminology. We can use them interchangeably. So, with our equity of $30 million and our liabilities of $70 million, we have a total liabilities and equity of $100 million. This is equal to our assets of $100 million. So, the balance sheet equation, or more commonly known as the accounting equation, is assets equals liabilities plus equity. Or we can write this equation as assets equals debt plus equity. Since assets of $100 million must be balanced with total liabilities and equity of $100 million, we call this financial statement the balance sheet, as both sides must balance, or in other words, must be equal. If both sides are not equal, we know that there is something wrong with our calculation. Please keep in mind the differences in American English and British English. The same applies to finance. Sometimes we have American terminology which differs from British terminology, which I will point out. Balance sheet, for example, is American terminology. The British terminology equivalent of this statement is the statement of financial position. It is named this way because it tells us the financial position of assets, liabilities, and equity at a specific point of time. For example, we have total assets of $100 million, total liabilities of $70 million, and equity of $30 million on the 31st of December 2019.